Hello, everyone. Good morning. It's a sunny morning from this part of the world, and I'm very excited to be with you here this morning. And depending on whichever part of the world you are tuning in from, I wish you good morning, good afternoon, and good evening. Welcome to yet another promising edition on the Extreme Speed Live. Well, before we kickstart the session this morning, let's run through our daily routine by confirming that we are all good to go this morning. So, if you can see my screen and you can hear me loud and clear, please let me know in the comment section by typing hi. So typing hi will confirm to me that we are all on the same page and we can kickstart this session. So I would love to see your feedbacks, please, while I log into my comment box. And let's see what we have here. All right. I can see a handful of comments. Thank you very much. Nikki1945, Claire Keel. I hope I pronounced that correctly. Nose, I see your comments. Ahmed Chandri, good morning to you. Going hand Tutu, good morning. Ben Kamarks, good morning to you. Thank you very much. Well, on this note, I welcome you all once again to yet another promising edition on the Experience Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we are going to be taking another fresh new look at the financial market as we also do a follow up detail to our expectations since the beginning of this new month. Well, as usual, we are going to be dissecting the current market conditions on the assets we have been monitoring since the beginning of the week using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight into these assets. Well, the assets on our watch list for this week includes the US All Spot, the USTech100, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And in fact, we've been doing pretty well across this asset, most especially the US Tech 100, which has been the most profitable asset on our watch list for this week. So we are going to be taking a moment to look into this asset very soon. Now, for those of you who are joining us for the first time, you are highly welcome on board, and I'm very excited to have you around with us this morning. Well, you might be asking, what is this platform all about? Well, as technical traders, we gather here every day to come together as a community and engage in follow ups and reviews of our current trading positions. Our main focus is on preparing ourselves for the New York session by using fundamental tools. Well, usually the session kickstarts 10 a.m. UTC, 11 a.m. West African time, and I highly recommend that you stay tuned in during this time so that you don't miss out on the insights that we will be sharing during the sessions. By being an active participant, you will gradually enhance your understanding of our analytical approach. Our aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So, once again, we extend a warm welcome to you and encourage you to actively engage in the comment section. So, with that being said, here we will be diving right into the business. And as usual, the first thing we normally do is to check on the economic calendar. And for those of you who have been part of this community for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. So, on the economic calendar, we usually focus on high impact event coming in from the economic docket that affects the assets on our watch list. And for this week, based on the asset we've been monitoring so far, we are going to be focusing on the United States and the United Kingdom economic docket. Well, for today, Thursday, November 2nd, after pulling out the high impact event, we have a handful of events which will be going on simultaneously from the United Kingdom economic docket. So from what we have here on the economic calendar, we have the Bank of England monetary policy report, we have the asset purchase facility, interest rate decision, which is one of the major events everyone in the market is looking forward to, as there is a general consensus that the interest rate will remain unchanged at 5.25%. So we look forward to see what the actual data is going to be on that one. Then we also have the MPC vote rate cuts, vote rate hike, vote rate unchanged, and monetary policy reports, all of which will be happening simultaneously. Then finally, we are going to be witnessing the Bank of England's governor's speech. And of course, this is another event that majority in the market will be looking forward to, as whatever the Bank of England's governor will be saying will be monitored closely to have an insight into the central bank's outlook on the economy, potential policy shifts, and reasons why they've either maintained the interest rate or increased the interest rate depending on whatever the outcome will be from the interest rate decision coming up today. So with all the information we have gathered here, which interestingly they will be happening almost within the same time, which is going to be in about 2 hours from now, we do want to see how the market will be reacting to this event, especially the GBPUSD, which is amongst the assets on our watch list for this week. And of course, you know, as technical traders, we do know that the anticipation of these events alone also has a tendency of influencing the market sentiment, which will be reflected on the chart as price action. Now, talking about price action, let's dive right into the current market conditions. And the first asset we are going to be looking at for this week, well, the same thing is happening again. Whenever I want to load up my US oil chart, we usually see a delay in the time of loading. I don't know why that is. Okay, we finally have the chart loaded. So the first asset we are looking at for today is going to be the US oil spot. Well, since the beginning of this week, we have observed how the market had consistently found lower highs and lower lows, though we had some moments where we had buying opportunity happened yesterday. But fundamentally, the buy position we had closed yesterday due to sellers maintaining control of the market, and it appears that the oil bids are currently under pressure as both the European and Chinese growth fall short of market expectation. And of course, this sluggish economic performance and concerns over the demand growth are causing a spillover effect on the oil prices. And as a result of this development, investors and market participants are apprehensive about a potential significant decline in the crude oil usage across the globe, which could lead to an excess supply situation. And if we look at the current market structure from a technical standpoint, I would really like us to run through how the week started for us for the sake of clarity and for those of us who are not part of our earlier editions, so that you can have the privilege of being on the same page with us. Now, at the beginning of the week, we were able to identify a range where price was initially confined within, that is between the $84.60 level and the $83.85 area, giving us an insight into the level of indecision going on in this market at the beginning of this week. And of course, you know how we do it in this community. Whenever price action falls into this kind of uncertainty, giving us a flat channel to work with, we usually exercise patience and wait for signals to come in the form of either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Well, as you will see here, at no point in time did we see price come close to the resistance line, as instead we continue to see attempt by the sellers to break through that support line of that range. And in fact, this triggered our first sell position for the week, and since that moment we have been selling the US oil spot. And if you remember vividly, on Tuesday's trading session we were able to spot another range between the $82.80 level and the $82.20 area to give us an insight into another consolidation phase. And of course, we did anticipate the breakdown of that structure to add a second position to our existing trade as we maximize the potential of that bearish move. However, during our live session yesterday, we were able to spot a little bit of bullish traction gradually resume around that $80.85 level, as this was the lowest point price action was prior to our live session yesterday. And in fact, despite the buying pressure we noticed around this area, we were very cautious of jumping into any buy position in this market, considering the downtrend, the bearish trend line we spotted at the beginning of the week after connecting the series of lower highs. And as a result of this descending trend line, we decided that we are not going to be buying, that depending on how price action reacts to that confluence around the descending trend line and the $82 level will determine if we are going to be buying or selling at that juncture. And one of the things we projected prior to the New York session yesterday is that if we notice the inability of buyers breaking out of that descending trend line, where we continue to see selling pressure below the structure, we want to be on a downtrend move. However, if price does break out of the descending trend line and the $82 area, we want to have ourselves positioned above the $82 level to capitalize on the bullish move. And this was exactly what happened a couple of hours into the New York session. We saw price break out of that $82 area, which triggered a buy position, giving us about 107 pips before the sell position came in to take us out of this buy position. And of course, if you had moved your stop losses accordingly, like we've always preached in this community, that whenever price moves significantly well in our favor, we do want to be moving our stop losses to secure the current buy position. So if you had done that, you must have been taken out of that buy position with a moderate size of profit, or at a worst case scenario, break even. Now, we saw the price drop back down into the descending trend line, bringing price back into the support line and even breaking down the $80.85 level to further emphasize the strength of the sellers at this point. So right now, we do not have any position running, as we want to monitor price action here today and see how we do want to position ourselves ahead of the New York session today. Now, before we go into the details of how we are going to be positioning ourselves, it's important that we take a quick review of the higher time frame so that we can have an holistic perspective into what is going on from a long-term perspective, and at the same time ensure that those of us who missed out on our earlier editions be on the same page with us here. So at the beginning of this week, the first step we did was to analyze the daily time frame, where we were able to identify some simple parameters which we said we will be using to guide our trading decisions. And in fact, if you look at what has been going on here since the month of March of this year, it's quite clear that price action is bullish. So we did connected the series of higher lows to give us this ascending trend line to work with. In fact, we have a couple of them, as you will see right here. We have the major ascending trend line, and in fact, we have a temporary one. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall feel comfortable in our buy positions, and of course look out for buying opportunities. Now, in addition to these ascending trend lines, is the key level we were able to spot at the psychological area at the $85 level. And in fact, if you go to as far back as July of last year, you will see how this level have played a major role in determining the direction of price action. Look at what happened here in the month of August. It was more of buying pressure before we saw a huge consolidation phase happen here, which lasted about 3 months between the month of September to November before price action finally broke down the structure in the month of November last year. So it's over a year now price action has been trading below the $85 area, and not until the month of September this year we saw price climb back above this area, and right now price is back into that zone as we can see a consolidation phase around this level. So you can see how important this key zone is going to be for us for this week. Then in addition to that was this ascending trend line, where we notice price action has been finding buy pressure since in the last 3 weeks in this market. And one of the major parameters we were using to guide our trading decisions for this week is this trend line. So we were looking forward to buying opportunity if price continues to the upside, breaking out of the $85 level. And if price breaks down this ascending trend line, we might likely see a situation where price will drop back into either this ascending trend line to incite an uptrend, or we might likely see a breakdown to incite a sell-off. Now, with the information we gathered here on the daily time frame, we did scale down into the 4 hours time frame, where we identified a simple setup that projected the idea we want to be using for this week. Now, we took into consideration the nature of price action since the beginning of the month of October, and what we saw here is that despite the strong impulsive leg that brought price into that demand zone around the $81 level, we saw how it became difficult for sellers to break through the zone throughout the month of October. You saw buy pressure here negating all sellers' attempt. The same thing also happened during the course of the last trading week of the month of October, and since the beginning of this month we've seen some selling pressure bringing price back into that area, leading into a choppy situation where we are not sure if price sellers will be able to break through the demand zone to the downside to incite a downtrend move, or buyers will still gain some traction to push price to the upside. So you would agree with me that with the information we have gathered on this 4 hours time frame, that we are at a crucial juncture in this market. Now that we are within that demand zone at the $81 area, we do want to see our participants in this market have been reacting to this zone since the beginning of this week, to give us an insight into how we are going to be positioning ourselves for today's trading session. Now, to do this, we will need to scale down back into the 1 hour time frame, where we want to see what is really going on here. Now, the first thing we observed on the 1 hour time frame, which is going to be a major parameter we will be using to guide our trading decisions for today, is this beautiful descending trend line you can see on your screen right now. And of course, you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we want to feel comfortable in a sell position or look out for selling opportunities here. So because of the strong bearish momentum we've been witnessing since the beginning of the week, let us first of all deliberate on the potentials the sellers have in this particular market and what is it that we want to see here that will make us consider selling the US All Spot. Now, if we zoom into the current structure, remember that we had a level situated at the $80.85 area yesterday, and it appears this level has finally been broken during the later part of the New York session yesterday, and in fact this bullish momentum here could be considered to be a retracement back into the trend line. And if we continue to see certain pressure, price breaking back down the $80.85 level will definitely be welcoming selling position. So in this regard, what I want to be doing right now is to position myself below the $80.85 area to capitalize on the downtrend continuation. Now, there are two ways to which we can capitalize on this move. First of all, for those of us who are profitable so far this week, that is, if you have been part of the selling opportunities we took advantage of at the beginning of the week, you will currently be running with about 200 and something pips in profit, so you can afford to leverage on the profit you have made so far this week to test waters below the $80.85 area. So in that regard, placing a sell stop order makes quite a lot of sense below the $80.85 level, and let's see how price is going to play out around that level. However, if you are new with us here in this community and this is going to be your first position on the US All Spot, then I will encourage you to exercise patience and wait for confirmations to happen before jumping into the sell position. So you can have a breakdown, retest of the trend line and the $80.85 area to capitalize on the downtrend, and if price action goes on to break down the $80 level, which happens to be the lowest point price action has been so far for this week, that will definitely welcome more selling opportunities in this particular market. So that is how we are going to be positioning ourselves for selling opportunities for today's trading session. Now, let's talk about the potentials the buyers have. You know how we do it in this community. In as much as we're looking out for a downtrend continuation, we also want to keep tabs with the potentials that buyers could also come in to push price to the upside. And if buyers will come in at this juncture, how do we intend to capitalize on the move? What is it that we want to see on this chart that will convince us to change our buyers from bearish to bullish? Well, the first parameter we are going to be using here is that descending trend line. Remember, this has been supporting the bearish momentum, and of course, if this descending trend line gets broken to the upside, then we want to be seeing this as a signal that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, what do we want to see here? Well, I want to see strong bullish move breaking out of the structure, and in fact, after the breakout happens, price should come back, retest the structure, and give me signs that sellers are finding it difficult to drop below the $80.85 area to give me the confidence of joining the uptrend move. Now, if you look at what has been going on here in the last couple of hours, you will see that though we have a breakout, but we have something that looks like a shooting star candle here, which from a technical standpoint reveals selling pressure. So because of this shooting star candle, this has negated that bullish trend. I am still waiting for something like an engulfing bullish candle, break out of the structure, retest, giving me confirmations before I jump into any buy position here. And if this does not happen and price continues to climb up, then the breakout of the $82 area will be welcoming buy positions here. But the way things are going right now, it doesn't seem that buyers are having any slight chance of pushing price to the upside. So we really need to be very, very careful here. So we maintain below the $80.85 level as a spot. We're looking out for selling opportunities, and if price breaks out, reaches the descended trend line and the $82 zone, we look out for buying opportunities. And in fact, we have multiple levels here that we can use to maximize the bullish move. So this is my view here on the US All Spot for today. So let's see how the market will play out around that area. But one thing for sure here is how important that descending trend line is, as it will be determining how we are going to be positioning ourselves for the next move. A breakout price remains above the descending trend line and we find higher highs and higher lows. Let's get ready for buying opportunity. But if price drops below the $80.85 level, then we want to be looking out for selling opportunities. So this is how we are going to be managing our positions. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. And you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, I do want to assume that we are all on the same page. And in that regard, we'll move on to the next asset. So I can see a handful of other comments here after my mention this morning. I see you, Carrie. Good morning to you. Ines 84, good morning. It's been a while since I saw you, Ines. How are you doing today? I can see Saba 9870AZ0. Good morning. 5659. Good morning to you. Blinny, good morning to you. Glad to have you around with us this morning. So with that being said here, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, and another phenomenal 24 hours we're witnessing right here on the USTech100, as we saw the price skyrocket to find new highs around the 14,800 zone. It has been quite an interesting week for us in this community on this asset. Remember, we have kept on holding on to a bullish bias as long as price action remains both above the ascending trend line and the 14,270 zone. Now let's run through how the week started for us and how we in fact position ourselves for this buying opportunity. Well, at the beginning of the week right here on the 1 hour time frame, we initially saw a bullish gap, which revealed the tendency of institutional sentiment during the course of last weekend, to give us an insight into where the institutional thinking price will likely go for this week. Then in addition to that, we noticed a consolidation phase where price was confined within the 14,270 and the 14,225 area to give us an insight into the uncertainty during that time. And of course, you know how we do it in this community. When price action falls into this kind of range, we usually exercise patience and wait for either the breakdown of structure to welcome selling opportunities or the breakout of structure to welcome buying opportunities. And of course, at no time did we see price break down the support line. In fact, there was no time price broke down. So this had already negated the idea of selling at the beginning of the week, as instead we saw price continue to push, breaking out of the resistant line of that range. And in fact, if you had missed out on the initial opportunity, the market was kind enough to come back, retest the structure multiple times to incite an uptrend continuation. In fact, we saw what happened here on Monday. We saw what happened here on Tuesday. In fact, during the New York session on Tuesday too, we saw buy pressure around this area. In fact, we had a couple of multiple opportunities to be part of that uptrend. And since that moment, we have been buying the USTech100. Now, remember that we also had multiple levels like the 14,320, which we also used to maximize the move. We also added more positions at the breakout of the 14,420 level during the New York session yesterday to maximize this bullish move all the way to the upside. So for those of you who still had a buy position since the beginning of this week, you will currently be running with about how many pips now from this entry point to this moment? You will currently be running with 500 pips in profit on that single move. And in fact, the second position here has about 450, while the third position here has about 350 pips in profit. So on this single move, we are having over 1,200, 300 pips in profit on the USTech100, which is something very, very massive for us here in this community for the first half of the week. And in fact, at this point, you can afford not to take any more positions on the USTech100. But with that being said here, you know how we do it. The next thing we want to be doing right now is to ensure that we move all stop losses on our buy position and secure this current position, as we never can tell. Sellers could come in any point in time, maybe in anticipation of a sell-off, which could reflect on the chart as a retracement into the structure that was broken yesterday. So in that regard, let's kindly move our stop losses, and from the current structure here, I will be suggesting that anywhere around the 14,700 and the 14,650 seems most appropriate to lock in all buy positions here, and let's see how the price will react above this zone. Now, while we are trying to secure our position, please note that we do want to give enough breathing space for price action to move around. So that is how we are going to be managing our current buy position on the USTech100. Now, with a well secured position at this juncture, what is going to be our next line of action for today's trading session? How are we going to continue buying the USTech100? And if we are, where are we looking at adding more buy positions? And if we are going to be selling, that is in the case of a potential retracement phase, which will be a reflection of profit-taking activities, how do we intend to join the counter trend opportunities? Well, before we go into the details here, let's run through the higher time frame for the sake of those who missed out on our earlier editions, so that we can all be on the same page and at the same time have an holistic perspective into what is really going on in this market. Now, the first thing we did at the beginning of the week was to scale up into the daily time frame, where we observed that price action has been on a strong bullish momentum since the beginning of this year. And in that regard, we had this ascending trend line marked out after connecting the series of higher lows. And since the beginning of this year, you can see our price had consistently respected the ascending trend line. However, a couple of weeks ago, we finally saw the breakdown of the ascending trend line for the first time this year, going on to break down the 14,650 level at the same time. And of course, from a technical standpoint, whenever we notice price break down a key structure such as this, we expect that some point in time price will come back, retest the structure to incite a downtrend continuation. And with this idea in mind, we anticipated this opportunity after noticing the resumption of buy pressure above the $14,000 area, which is peculiar with what happened in the past around the zone. And as a result of this, we capitalized on this counter trend opportunity, but we were not sure how far it will go. So we allowed our TP target to extend into this descending trend line where we said we want to see how price will react to the zone to determine if we are going to be adding more buy position if it gets broken to the upside, or we get ready to sell if buyers find it difficult to break through those areas. So this is what things are looking like on the higher time frame, which led us into the decisions we made at the beginning of the week. Now, scaling down into the 4 hours time frame, we had a beautiful setup which we were using. Well, the first thing we observed on the 4 hours time frame was the descending channel. After connecting the series of lower highs, we had the resistance line of that descending channel marked out. Then we also connected a series of lower lows, giving us the support line of that descending channel. Now we also added another level here at the 14,400, which interestingly shares a confluence with the resistance line of that descending channel. And we agreed here that if selling pressure persists below the 14,400, we want to be selling, continuing the downtrend of the channel. But if price breaks out, we look out for buying opportunity, as you have seen here. So this is what has led to our decision of buying this asset. So right now, what is going to be our plans for today? Well, first of all, I want to acknowledge that area around the 14,785 zone. Now you will see why I've made mention of this. Let me mark out that level first of all. So we have the 840. I think that's most appropriate. 14,840. So let's mark this level out, and we will be using it to guide our next line of action for today. So we have the 14,840 level. So you do want to be marking this level out on your chart. So we can see that price action is gradually approaching that level right now. And in fact, if we go to as far back as the beginning or the last couple of days of the month of September, we can see how this level had played a major role in determining the direction of price action. Now look at what happened here at the beginning of the month of October. After price broke above that area, it became a buy niche. We saw attempts that sellers wanted to break down the structure, which finally was successful as we saw price broke down the structure during the mid-month of October. And since then, price has been trading below the structure. In fact, we saw a retest of structure here last week, pushing price further to the downside. Now, price action is gradually approaching that zone. Now, the question at this juncture is, how will the price be reacting to the 14,840 zone today to determine what our next line of action will be? Will price get into that structure and a resumption of selling pressure begin to incite a retracement back into the 14,400 level, which was broken yesterday, where we might likely be seeing the anticipation of another uptrend continuation from there? So that is one scenario we are going to be looking at today. Then secondly, we might be seeing a breakout of the 14,840 to incite an uptrend continuation. So you would agree with me that we are at a very crucial juncture in this market. We are depending on how price react to the zone will be determining what our next line of action will be. So for those of us who still have a buy position, kindly move your stop loss, secure your current buy position, and let's see if the market will break out the 14,840 to welcome more buying opportunities. And in fact, if selling pressure resumes like double top structure, then we mark out the neckline of the double top structure to incite a sell-off back into the zone of the resistance line of that descending channel that was broken during the midweek, during yesterday's trading session, where we shall be looking to see how the market would react for maybe new opportunities to buy. And in fact, if we kind of see selling opportunities here, we are looking at a minimum of 400 pips to a maximum of 600 pips to catch here if price drops back to the downside. So let's see how the market will play out here. So at this point, we shall be marking out these levels on our chart, as we will be needing them to guide our trading decisions for today. Now, another thing we have here is this ascending trend line, which has been respected since last week Thursday, and as long as price remains above that trend line, we shall feel comfortable in our buy position. And please note, price could still retrace back into structure. So for those of us who missed out on that buy position yesterday, let's see if the market will come back to retest it and incite an uptrend continuation, giving us new opportunities to join the uptrend move. So these are my views here on the USTech100. If you have any questions whatsoever as regards this current setup or my explanations, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds as usual to see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So I see a couple of comments here from 25262324. Good morning. Thank you very much for checking in. Then I see this from Arrow Star. Arrow Star, good morning to you. Glad to have you around. And Arrow Star is saying that we should say something on the Hero USD. Unfortunately, the Hero USD is not part of the assets on our watch list for this week, and we still have two other assets to look at, which is obviously I'm running out of time here, and I don't think I'll be able to take on the Euro USD. So that is why it's important that you be part of this session on Mondays, where you have the privilege of giving us assets we want to be monitoring for the week. So I encourage you to be part of our Monday session so that you can drop any asset you want us to look at for the week. So in the absence of no questions, I do want to assume that we are on the same page here on this particular asset. So in that regard, we move on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD. This is an asset that is going to be on everyone's radar today as we look forward to the Bank of England's interest rate decisions. Well, yesterday, following a choppy market condition leading up to yesterday's Federal Reserve interest rate decision, buyers regained momentum, which we of course took advantage of. I do hope you did that, and surpassed the significant level of the 1.21330 level, aligning with our short-term bullish outlook on this market. That is on the 1 hour time frame, I think. Yes, so that's on the 1 hour time frame, as you will see here. And today, the Bank of England's Monetary Policy Committee will be convening to determine the course of monetary policy and subsequently disclose their decision as regards the interest rates. And of course, I told you earlier that it is widely anticipated that the Bank of England will maintain the base rate at 5.25%, meaning it's going to be left unchanged. And considering the likelihood of volatility before or after the announcement, it is advisable that we protect all current buy positions at this point in time. Well, from a technical standpoint, I would like us to run through how the week started for us, especially for those who are not part of our earlier editions, so that you can be on the same page with us and in fact have an idea into what led to the decision we made of buying the GBPUSD. So at the beginning of the week, we identified a range. Price was confined within the 1.21330 level and the 1.21060 level, giving us an insight into the indecision at that particular point in time. Now, in addition to that range was those ascending trend lines we spotted, as you will see after connecting next series of higher lows, we had this ascending trend line marked out. And of course, we agreed that as long as price remains above the ascending trend line, we shall feel comfortable buying the GBPUSD. And coupled with the range we identified there, it made quite a lot of sense to look out for buying opportunities at the breakout of the 1.21330 level. Now you will see that since the beginning of the week, we have been buying around that area, and both instances price had moved significantly well, like 70 pips thereabout. You will see price came back again into that area. Buy pressure resume, though we had a little bit of breakdown, but this range contained price action as we saw price climb back up again to incite another uptrend scenario. And for those of us who took advantage of these buy positions, well done to you for being on standby to capitalize on this opportunity. And for those of you who still have your current buy positions running, you will be running with about how many pips in profit right now? About 60 pips in profit if you are taking one single position. And remember that we said we were going to be adding more buy positions at key levels such as the 1.21600 area, the 1.21750, and of course the 1.21990 area, which is yet to be broken as at this time. Now, for those of you who still have a buy position running, it's very advisable to protect all position, considering the tendency that we could witness volatility prior and even after this Bank of England's interest rate decision today. So I would advise you to move your stop losses to anywhere around the 1.21600 area, depending on this current structure, while we continue to monitor price action from the zone. Now, with a well-secured position in this particular market, how do we intend to capitalize on the next trading opportunities for today's trading session? How are we going to continue buying the GBPUSD, or are there chances that sellers could come in at this point? Well, to take a better look at what is going on here on the 1 hour time frame, it is very, very clear that the current market condition remains consolidating at this point. As you will see, price action since the beginning of this week has remained confined within the 1.21990 and the 1.21060 area to emphasize the level of indecision going on in this market. And of course, you know how we do it in this community. Whenever price action falls into this kind of uncertainty, we do want to see a breakout of this range to give us an opportunity to either buy or sell. Now, with this idea in mind, if we are going to be adding more buy positions to our existing trade, we do want to be seeing price break out of that resistant level at the 1.21990 area, which happens to be the highest point price action has been for this week. Now, to buy this asset, we want to see price break out, taking out all the sell positions. As you will see that since the beginning of this week, we have seen how this area had become a barrier, negating all attempt by the buyers to break out of that structure. Now, if we can see a breakout of the structure this time around, this will be the first time we have a breakout this week, and which will also buttress that buyers may be dictating the pace going forward. Now, there are two ways to which we can capitalize on this buying opportunity. Now, for those of us who are profitable so far, that is, if you have been part of this bullish opportunity we capitalized on since the beginning of this week, then you can afford to leverage on some of the profit you had made so far this week to test waters above the 1.21990 level. So having a buy stop order above the structures will make quite a lot of sense. And in fact, if it doesn't work out, we know that we are only risking some of the profit we have made so far this week on that particular trade. However, if you are joining us for the first time and this is your first trade with us on the GBPUSD, then I will encourage you to exercise patience and wait for confirmations to happen before you jump into the position. Now, confirmations will come after the breakout of structure. We want to see price retrace to retest the structure, like a retest of the 1.21990, or it could even come to as far back as the trend line here. But the most important thing we want to see is higher highs and higher lows, or a reversal pattern to incite an uptrend move. Then we can join the bullish move to the upside. Now please note that it is very important you have a well-defined risk strategy to manage your positions, as you do want to be having a stop loss in place, which could be dovetailing between 20 to 30 pips in stop loss, depending on where your entry point is. So that is how we are going to be managing our positions on the GBP USD for today. However, in as much as we're looking out for buying opportunity, and if it so happens that the continued selling pressure we have been witnessing around the 1.21990 level persists and buyers find it difficult to break through the structure, then we might likely be seeing a downtrend situation. But if we are going to consider selling, then what is it that we want to see on this chart that will make us feel comfortable switching to the bearish buyers? Well, the most important thing here is this ascending trend lines we were able to spot here at the beginning of this week. Now you will see how this ascending trend line had continued to have continued to be a platform for buying opportunities in this market. Now, for us to sell the GBP USD today, I would rather want to see price action slice through that descending trend line, break it to the downside, and in fact I want to see some confirmations like a retest of structure where continued selling pressure reveals that buyers are finding it difficult to stay afloat of that ascending trend line before joining a bearish momentum to the downside. So this is the only condition on this current market structure that will make me consider selling the GBP USD for today. So a quick recap of what I said so far. We are going to be looking out for buying opportunities at the site of a breakout retest of the 1.21990 area, and of course look out for selling opportunities only if we witness a breakdown retest of these ascending trend lines. So let's mark these levels out on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today's trading session. If you have any questions whatsoever as regards to my illustration and explanation, feel free to let me know in the comment section. So I will be taking a couple of seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart. All right, everyone, in the absence of no questions, I do want to assume that we are all on the same page, and in that regard, we shall be moving on to the last asset on our watch list for today. So the last asset on our watch list for today is the XAUUSD, my favorite, and it's popularly known as the gold spot. And in fact, I already have a buy position triggered as at this morning, and I would like to share with you in detail what led to the idea of buying this asset. But before we go into the details, let's quickly run through how the week started for us on the XAUUSD. As we know, we have some newcomers in the house who would love to have an insight into the ideas that guided our decisions for this week. Well, first of all, at the beginning of this week was this ascending trend line we spotted. And of course, you know that throughout the month of October, price action has been on a strong bullish momentum. And we agreed here on Monday that as long as price remains above this ascending trend line, we shall be looking out for buying opportunity. Now, in addition to that was this range which was spotted at the beginning of the week, as price was confined within the $2,006.50 level and the 1,995 area, to emphasize some level of uncertainty around that point. Now, after considering the impulsive move that started on Friday of last week, we agreed at the beginning of the week that the selling pressure we noticed that started this week may likely be a retracement of that impulsive move to inside an uptrend continuation. However, we saw what happened here Monday stroke Tuesday. We saw how the $1,990.60 price level continued to negate all attempt by the sellers to break through that area, giving us clues that this might be a new platform that could push price to the upside. Now remember that we had a buy position prior to all this rejection, and then the final breakout of this descending trend line triggered our more buy positions in this market. But unfortunately, we saw selling pressure come in, taking us out of that position, and of course this led to the breakdown of the support line where we agreed on Tuesday trading session that a breakdown of this level will welcome selling opportunities. And as you will see here, price dropped significantly to the downside. Hold on a second, giving us about how many pips was that? We saw about 150-60 pips thereabouts before this buy pressure began again. Now, in the last 24 hours prior to the Fed interest rate decision yesterday, we saw how the market experienced some volatility. And during the Asian session, stroke the UK session, we noticed how gold prices appear to gain some positive momentum, and driven by a decline in US bond yields and a weaker US dollar, the ongoing decrease in US Treasury bond yields as fueled by expectations of the Federal Reserve halting interest rate hike continues to support demand for the gold at this point in time. Now, from a technical standpoint, if we look at this current structure on the 1 hour time frame, remember that at the beginning of the week we had a key level at the $1,980 area. And of course, you know how we use our key levels in this community. As long as price remains above the key level, we feel comfortable in a buy position. And if you take a closer look at this current structure, you will see that since last week Wednesday, this area between the 1,980 and the 1,975 area had been an area where sellers have struggled to break through that area. Now look at what has been going on here since last week Wednesday. We saw buy pressure resume here. We saw buy pressure resume here last week Thursday. We saw another buy pressure on Friday, and in the last 24-48 hours, you will see that despite the strong bearish momentum that started this week, we can see continued buy pressure around this area, which further emphasize the strength of the buyers around this level. And as a result of this, I want to maintain this demand zone, and it might likely be a platform that will incite a strong bullish momentum to the upside. So what we are going to be doing here is that as long as price remains above this demand zone, we have no business selling the the XAUUSD. Now, in addition to this demand zone we identified, I'm beginning to see the emergence of a reversal pattern in the form of a double bottom structure. So if we take into consideration the impulsive move that started on Tuesday into this area, we saw price climb back into the $1,986.50 level, and the inability of price to break down and settle below the $1,974.50 area, for me, is a sign that we might be seeing a bullish opportunity. And if you look at what is going on here, it appears we have a reversal pattern to work with for today's trading session. And of course, you know how we do it in this community. Whenever we notice this kind of reversal pattern, the next thing we want to be doing is to mark out the neckline we will be using to guide our trading decisions. And of course, a breakout of this neckline will be validating this reversal pattern and giving us confirmations to join an uptrend move. And as you will see what is happening here, price action had already broken out of that structure, and in fact I have a buy position running at this point in time. And for those of us who had bought early enough, that is around the 1980, well, kudos to you for being on standby to capitalize on that one, as you will currently be running with about 90 pips in profit. And for those who took advantage of this one, will be currently running with about 28 pips in profit at this point in time. Now, to further make things a little bit easy for us, you will see that since Tuesday's trading session, price action had remained confined within the $1,986.50 level and the $1,974.50 area, to further emphasize the level of indecision going on around this robust demand zone we've identified here, which of course emphasizes some uncertainty going on here. So as you know, whenever we have a range like this, we usually wait for either the breakout or breakdown of the range to give us an opportunity to trade. And in fact, we have a breakout of the resistance line, which further emphasizes this uptrend scenario. So let's hold on to these bullish expectations. And remember that we also have multiple levels here that we will be using to maximize the potential of this bullish move. So we have levels such as the 1995 area. We also have the $2,000 MAC, and if price continues to climb, we have the $2006.50 level, and of course the $2010 area, all of which are areas we look out for opportunities to add more buy positions to our existing trade. Now, as long as price remains above the 1986.50 and this descending trend line, we shall feel comfortable in this buy position. Now, in as much as we are holding on to a bullish bias on the XAUUSD, we cannot ignore the potentials of sellers. And if we are going to consider selling the XAUUSD today, what are the conditions that needs to be met before we jump into the sell position? Well, first of all, price needs to stay below this descending trend line for me to feel comfortable selling. And secondly, we want to see price break down the support line of that range I identified earlier, which lies around the $1,974.50 zone. So to give a visual representation of what I mean here to sell, I want to see the breakdown of the 1974.50 retest of structure for me to confirm selling the XAUUSD for today. So this is my view here on the XAUUSD. It's a simple setup. We are only going to be selling at the breakdown of the $1,974.50 level, and we remain bullish as long as price remains above that descending trend line. As we have seen right now, we have a breakout of the descending trend line already, and there's still a possibility of price coming back to retest the trend line, which we should not ignore too. So let's take all this into consideration while we continue to monitor price action ahead of the New York session today. So these are my views here. If you have any questions, feel free to let me know in the comment section while I take the next 10 to 15 seconds half to see if there are any questions before going on to round off on our session for today. All right, 5600, I see your comment. Okay. Passes 80, good morning. Thank you. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be rounding off for today's trading session. It has been a wonderful moment with you guys. I really enjoyed every single moment I had with you, and for those of you who are joining for the first time, I do hope you are able to gain one or two things from what we discussed here today, and I encourage you to be part of our subsequent editions. As the more time you spend with us, the better you get in understanding our analytical approach in this community, and eventually be able to make your own independent trading decisions based on the ideas you gather from this community. So I look forward to seeing you again tomorrow, same time, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time get ready for the last trading day of this week. Do have a wonderful evening, everyone. Bye bye.